Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to continue my analysis of stocks out of the healthcare sector. And the last time I analyzed Universal Health. And if you want to check out this video, just you find a link here up on the screen or also down in the description. Today I want to analyze a second stock out of the healthcare sector, and today it's UnitedHealth Group. I will take a look at the stock price right now. I will go through the financial numbers, calculate the intrinsic value, and then tell you what I think about to invest in UnitedHealth Group right now. So let's go. But first of all, take a look why it's an interesting market or interesting sector. And one of the reasons is just that the healthcare costs in the United States just increased drastically over the last decades and will, by these estimates, also in the next decade. And the reason for that is very simple. The people gets older, and so number of people who need healthcare gets larger, and also the time in which the people need healthcare grow. The whole market, the whole sector is a growing market, a slow but steady growing market over the next decades too. And so this sector is interesting, and this was a reason for me in the first place to take a deeper look into these companies. And as I said, today I want to look into UnitedHealth Group. They are currently traded at $373 with a market capitalization of $353 billion. This is quite a lot. And with that, they have a PE ratio of 23 with a forward dividend yield of 1.34%. When we look at the long-term chart, then we just see this is a amazing chart over the long term, and in the last decade also the stock just exploded 1,388% to currently $374. The question is it even at these high levels still a good investment? And to answer this question, as always, I want to take a deeper look into the financial numbers of UnitedHealth, and starting with the revenue here on macrotrends.net. And the revenue over the last 5 years just grew from $157 billion to currently $257 billion. When we look at the earnings per share over the last 5 years, it grew from $6.01 to currently in the trailing 12 months $16.03. Also, very good picture. The net margin with 5.99% is low, and they working always between 4 and let's say 6% on the net margins. Not that much, but this is part of the business. The return on investment with 14.77% currently is quite good, and also over the last few years is always between 10 and 16%. That's okay, that's nice. And also the return on equity with currently 23% is also good, and they are able to work on return on equities also over the past few years always around 20%, and that's a nice number. Very important to look at the free cash flows, and then we see they are able to have free cash flows all the time over the last years, and they also grow the free cash flow from $8.46 5 years ago to currently $20.94. Also here, very good growth in the free cash flow. Very nice. And also when we look at the balance sheet, we see a very solid picture. UnitedHealth right now have a debt equity ratio of 0.57, which is quite solid and low, just as I like it. As you follow me for a while, you know I like my companies with a debt equity ratio under 1. So overall, the financial numbers of UnitedHealth are very good. They are a big, strong company with a solid balance sheet. But of course, as always, to have a good business on the one side is just one step. then we also have to be able to buy it to a reasonable price. And to know if there's a reasonable price right now, we have to calculate the intrinsic value, and that's our next step. Therefore, as always, I go to the Excel sheet of Sven Carlin and his research platform. Sven Carlin, if you don't know him, is for me the best YouTuber in the financial sector. Just check out his channel, and I will put a link to the free download to this Excel sheet here also down in the description. And to calculate the intrinsic value, we need first of all the earnings per share of $16.03 in the trading 12 months, and then we need a growth rate. It is a slow growing business, not that fast, and so for the next 5 years I put in a growth rate of 6%, and for the years 6 to 10 of 4%. With a discount rate of 12%, this is my expected return for almost every investment in the stock market, and a terminal multiplier of 20, which is, I guess, reasonable. And if we calculate that together, then we come to an intrinsic value of $278. And when we compare the $278 in the intrinsic value calculation to the current stock price of $373, then we see that it seems like UnitedHealth right now is a little bit overvalued. So on the one side, we have a great business, a very strong company with a good market position, but on the other hand, we also have an overvalued company right now. And so I will put UnitedHealth on my watch list, but not that high because we are quite far over the intrinsic value. And so maybe if we have a crash, correction, whatever, then maybe we come to prices under the intrinsic value, and then it could be also very interesting. Right now it's just a good business, but a too high price. And so it's not that interesting right now for me. And so my first choice in the healthcare sector, after I compared these two and also looked into some others, is Universal Health. When you check out my video about Universal Health, you will find out that this seems like the better investment right now. And so I will just wait for a good moment to buy in, maybe in the next few weeks. We will see. So that's it with my analysis today. And if you like this whole idea of long-term value investment and calculating intrinsic value and analyzes businesses, then feel free to subscribe to my channel and ring the notification bell to never miss another video. And when you do that, then you will also get a weekly update on my real money portfolio with every transaction I do in this portfolio. And here you see just a few view into this portfolio, and you find deeper analyses to all the companies in this portfolio on my channel. So also check this out. And with this portfolio, I have a performance since the 2nd of December 2019 of over 60% right now, which is a big outperformance in the same time span to the S&P 500. And if you like this whole idea and if you like the transparency of this portfolio, then like this video, share it, subscribe to the channel, and then we will see on the weekend with my weekly update on my portfolio. See you then. Take care. Bye bye.